I remember when he first dropped on the international scene, it was 9 years ago at Davos, made a big appearance and a big splash as well. What is the message he and President Xi are trying to send about stage 2 or stage 3 or stage 4 of the Silk Road experiment?
Well, they're sending two sets of messages here. They're sending the first message, which is the policy stimulus that is effectively a repeat of what they successfully pulled off in 2015, is starting to work again, and we should expect, or at least they're trying to frame market expectations, to expect a pickup in economic indicators as we go through the year. But then in terms of the broader strategic goals, I think they continue, as you mentioned his first appearance at Davos, but I think I go back to Premier Xi's appearance at Davos a couple of years ago, where he took on this role, didn't he, of a global statesman who is protecting open and free trade, which is perhaps not a role we're normally familiar with the Chinese administration. And this is in the same vein that he's alluding to protectionist forces and that being the big threat to global growth going forward. Okay, well, the key phrase here is, the famous phrase with Li Keqiang is comprehensive reform. James Bevan, Steve Roach, writing in Project Syndicate, makes clear there's finally a shift in China from the frontier economy it used to be to a more sophisticated consumer and middle-class economy. Do you agree with Dr. Roach?
Sadly not. There is a direction of travel that is consistent with Mr. Roach's thesis, but there is still insufficient scale and progress to be able to form a positive conclusion on the importance of domestic economy. And therefore, I still worry that China is more interested in exporting deflation, still subsidizing, still dealing with this problem of free trade versus fair trade, to coin Mr. Trump's language. And I do think, therefore, that for the remainder of the year, we will have China continuing to want to run down inventories, continuing to subsidize, continuing to drive prices lower. And that's very much the story that has been picked up by the bond markets.
So, Simon, do you think the Chinese economy will actually escape deflation in 2019?
I do, actually. I think we have a view that the growth story is going to very much back-ended, and we're going to see a couple more soft quarters of data. But actually, there's quite a lot of both Chinese and more global specific factors to expect a bit of an upswing as the money supply growth starts to pass through, not just from Chinese monetary expansion, but more global monetary expansion. So I do think, as a result, the short-term deflationary pressures, which James is absolutely right to pinpoint, will be temporary. And investors, if they're patient, will start to see an upswing at the end of the year.
So can I press you, Simon, on the issue of corporate earnings growth this year? Because I worry that this may be a year when global corporate earnings growth turns negative. Presumably you don't subscribe to that view at all.
I don't. Mid-single digit growth. I don't see a negative move in that direction.